All right, the commodities rally is running into some resistance. Gold futures hit another record high today and then retreated. Cotton, corn, and soybeans futures fell for the second day in a row. Is the party over, we ask, on the first day of the peak? Joining us now with his outlook is David Stroud, CEO of TS Capital, a hedge fund that focuses on commodities. He's been trading commodities for 10 years, including stints at Lehman Brothers and Citigroup. Also with us from a markets desk, Adam Johnson, who has been digging into commodities all year. And Adam, you and David talk a lot about commodities as well.
So is the party over?
No, I don't think the party's over at all. From an inflation-adjusted standpoint, and this sounds crazy, but when you look at cotton prices over the long term, over, let's say, 30 years or 40 years, are relatively cheap. And I'll tell the Civil War story. And I think Adam is the one that gave me the idea about this. We were talking about cotton prices being $1 and, say, $1.20 a pound during the Civil War. They're roughly in the same area right now. However, that is not adjusted for inflation. If you adjust that same price for inflation, and by no means am I saying cotton prices are going to reach this level, but if you do adjust that for inflation, it's $5 a pound. So,
although they didn't have any competitors during the Civil War, right? Back then, if you wanted a shirt, it was made out of cotton or maybe hemp. And now you've got so many other choices.
Correct.
You think then that cotton, which is up, what, Carol, 70% year to date? Or
about 70%.
You think that you continue to see a big rally there, and you've been making some good money in cotton this year.
Yes, we've done very well with cotton. We've got the luxury of having our research is fundamentally based, and we've had the luxury of having friends that are actually in the cotton business. So we spend time talking to them to see exactly what they say.
And the fundamentals are there, David.
The fundamentals are still there.
What are they? Talk to me about them.
You know, I hate to jump on the China bandwagon, but that's what it is. It's really that simple. There are so many people over there.
Not to mention weather on the supply side, both here and in Pakistan, for starters, right?
There are both elements. In some markets, in some of the commodity markets, you have the supply issue, and some just the demand issue. The cotton market, you have both issues, and it does make it a little hairy for trading.
Is it the same thing in copper? Because we continually hear stories that there is no more copper. People are forecasting we're going to see an all-time low in copper stockpiles. And, of course, the big story on the people who use it is in China, right?
And look at that chart, by the way, that long term. In other words, it gets up to 4. It tends to trade down.
Certainly does.
Now there's talk about maybe busting through.
Well, you know, in fact, I read an article this morning from Bloomberg that discussed how it's more difficult to refine copper, how it's becoming more difficult to refine copper. And actually, we are able to resupply enough copper each year where we don't really have a, let's call it, we don't really have a supply problem. In that case, we have a demand issue where you have more people that are
even with a slowing economy here. I mean, even with, I guess you can say we're in a recovery, but obviously it's not an incredible recovery. The same with the problems in Europe. It's all about Asia, isn't it?
It is. It really is, and it's a recovery. It's a slow recovery. Carol, you and I think a year ago we spoke about the doomsday scenario, and me coming from Lehman Brothers. You can appreciate a doomsday scenario, but the fact is we are recovering.
Right.
We are recovering, but we're just doing so at a very slow pace.
Now, I got to ask you, if we're talking about demand for copper, there's talk of possibly a copper ETF.
Yes.
And there's evidence in London that one fund in particular is stockpiling copper. So, in theory, that creates a whole new set of demand, right? If you're now having to back an ETF.
It really does. It puts you could throw the term out there, the proverbial going back to the gold standard with cotton. Same thing with the silver market, and that's where you really.
And that market has had a crazy run this year.
Yes.
I mean, is it fundamentally justified in your view?
Yes, and there's another issue there that goes along with silver. There's an issue of market manipulation in the silver market, similar to what happened in the 80s with the Hunt brothers.
We talked about it. Yeah, we've talked about it.
If that proves to be true, if that proves to be true, then I would think that would push silver prices much higher.
Listen, only 30 seconds left. You guys really did well last year and the year before in natural gas. Let me get your quick take on where it is, because Carol and I are looking at a chart today.
This year? Are you getting hurt this year on nat gas?
There are 2 words for natural gas: stop loss. You have to be very careful trading natural gas. It is a professional to professional market. Stop loss is the best way to go. That is one thing that we trade. We will hold cotton. We own December 11 cotton. Natural gas, we hold it sometimes 30 minutes, sometimes 30 days.
All right. Hey, David, thanks so much for joining us. David Stroud from TS Capital.